Hi everyone, good morning, happy Saturday. If you're watching me this morning, I'd like you to engage the comment section. Just type your name and where you're watching me from. Let's quickly have something amazing this Saturday. I decided to, do a trade recap of what I've been able to do throughout the week, so that I do know that a lot of you are going to learn from what I'm about to share in today's live session. So use the comment section, type your name, type where you're watching me from. It's gonna be amazing. Use the comment section, give me the engagement I deserve. I need to see your name and where you're watching me from. We're gonna get started very quickly. Just give me some minutes while I'm trying to connect with my other groups to join the session. I trust that you guys are having a good weekend. My weekends are usually, time to retrospect over the week, to take time to do insight study. Time to do insight study and post-trade analysis, especially, to see what has happened during the week, so you learn from what has happened. Chances are you're not going to get all the trades as at the time price action is printing out those entries, especially if you are a newbie or beginner trader. You've not yet trained your eyes to see these things as you should, so you're going to miss on those kind of entries quite a lot of time. So after the week, it's important you go back to the chart, study what price action has done, and you're going to get the trades that you have missed. Kelvin from Abuja, I'm happy to see you on my live session today. I can see Idris from Kanu, Chioma, Madam Financially Fit. It's been a long time I heard from you. I believe that you're doing great. All right, and my friend from Botswana, Sunday Daniel from Maiduguri. It's interesting connecting with all of you. Idem from Ghana. Thank you, my friends from Kenya. So that reminds me, I just saw some of our friends from the Kenyan community and Uganda community on this live session. So we're gonna have, a meet and greet with all the traders in the city of Kenya, specifically Nairobi, Uganda, and Rwanda in the month of June. We're going to be in Uganda first. We're going to be in Kenya first, then Uganda, then Rwanda. So I'm going to put up all those links to the WhatsApp communities for Rwanda, Uganda, and Kenya. If you are in any of these countries, please make sure you join the WhatsApp community. That's where we're making arrangements. That's where we're going to plan and drop the venues for the meet and greet between myself, Solomon King, and all of you, the traders in these communities. This is something you've prayed for, and we decided to visit your countries in the month of June, and we thought, why don't we meet with all the traders since we're going to be in your country, so that it doesn't just look like we just went to your country without adding value. So we're going to be doing that to these 3 countries. So make sure you join those communities after the live session. Just check the description of the video and you're going to see where you belong, and make sure you join. Okay, so to begin with, most times when we come here to do analysis, there are a lot of controversies, especially on the internet space. A lot of people saying, oh, if these guys are making money, why are they doing that? Why are they doing that? We are not one of those, trading mentors who preach and teach what they do not practice. We teach the things that we apply in our trading on a day-to-day basis. These are the things that we teach. And just, during the week, using the same concept, the same strategy I'm about to show you, myself and my team were able to make about £4,000 on an account. We were doing portfolio management for one of our clients who is based in UK. We did portfolio management on her trading account, and we made £4,000. It's a pounds account, actually. It's a pound account, and we made profit of 4,000. And you can see all the trades that made money for me were the GBPJPY. Do you see that? GBPJPY made money. We withdrew £4,000 and collected profit split from the performance. Okay, so those of you who are watching me right now and you feel like you have a lot of money, you don't have time to trade, you can reach out to me. We're going to make up arrangements with the Caris Trading Institute. All right, the Caris trading floor. The trading floor is responsible for every form of portfolio management. You're not going to send us money. You're going to fund your trading account with a specific amount of money. If you have $1,000, don't reach out to me, please. This is not for anybody trading $1,000 account or so. In fact, even if it's less than $5,000, don't reach out to me. Make sure your account is at least $10,000 or $5,000 live account. Then you can reach out and we can put up a contract. And these amazing guys, as you're seeing here, Caris Trading Institute, are going to do an amazing job doing portfolio management, and you're going to do profit split. Very transparent process. Contract is going to be signed before we start the process. Okay, so I just want to show you how I was able to cite those trade opportunities during the just concluded week, and we took advantage of it and made some money off the market, even though the market was truly not in a stable environment, because we were anticipating FOMC on Wednesday, CPI on Thursday. So I knew we were going to have a very tricky, highly volatile trading environment. But regardless, we still are able to do something because we know what we're doing. This is not guesswork. This is product of consistent study, investing time, energy, resources to learn about these things before going live in the markets. So this is the higher time frame, weekly time frame, GBPJPY. I'm sure you guys, those of you who have been following me, already know that we're bearish on GBPJPY, and you know why we're bearish. We're not just selling, we're selling because we see there's a heavy sell momentum on the GBPJPY. Price action created that sell displacement, shift of structure, traded back into that, sell side imbalance, buy side inefficiency there. Again, price consolidated for a while, and we call the sell right from this point after price traded into that daily time frame, sell side imbalance, buy side inefficiency, just like you can see here. This was about 2 weeks ago. We called the sell when we saw price action create a shift of structure here. Then we returned to take our liquidity above that relative equal highs. We were expecting price to trade into the bearish mitigation block right here. Mitigation because we had a failure swing before the shift of structure bearish. Price traded back into that mitigation block, and we started to sell the GBPJPY. All right, so we took out the external range liquidity right here, and we do know that price action is going to mitigate. First of all, do a little bit of repricing into internal range before it sells off again. Okay, so but we're going to check and see where we're able to see a trade on the 1 hour and why. So for me, when price opened on Monday this week and consolidated for a while, look at what Monday price action did. There was nothing to trade. Price traded above, swept the bearish order block right here. You see that bearish order block? We swept above it, but we later closed below it. That bearish order block. Now, price traded back into that bearish order block on Tuesday during the London Open. Look at this very well. This is a clear shift of market structure bearish. Price action created failure swing here, and the shift of structure here bearish, creating a bearish order block on Monday. Then price consolidated between that Friday Sunday opening, consolidated into Monday. Monday price action took out the high of the bearish order block, swept above it massively, but because we closed below the bearish order block, I knew that this was a run on retail stop loss. It's called stop hunt. All right, institutions did a stop hunt, took out all the people who were selling very early or selling from the previous week, and they've had all their stop losses around this level. While price action is doing that, price also traded into a rejection block right there. Okay, price traded into that rejection block right there. Do you see the equal highs? Price traded into that level, and look at the reaction. The massive drop into the range already communicates a message. Lets me know that we are still in this bearish environment, and we're going to be attacking the next round liquidity, which is of course the external range low right there. And guess what we did? I confluence time and reference point. Immediately price action opened on Tuesday during the London Open. You see that 2 a.m. New York opening time. That is the London Open. London opening time is 2:25 New York Standard Time. That's the opening and close. Convert that to your local country. You're going to see what that time is. And the New York session is 7 to 10 a.m. New York Standard Time. So price traded into that bearish order block right here. We tested it. Again, that's a mitigation block. You see that? Price traded into that level, and I sold off because we were right at the London Open. I sold off the GBPJPY with my stop loss just a little bit away from it, and price traded into the next strong liquidity, which was that low there. So we saw that expansion happen. Then during the New York session, again, price traded back into the bearish order block right here after creating a new bearish shift of structure there. Bearish order block with a fair value gap. You remember, the most valid order block is the order block with a fair value gap. So we sold off as price delivered some more. We took up profit because this was London close 5 a.m. New York Standard Time. So we knew that price action is going to consolidate during 5 and 6, and then at 7 a.m. New York Standard Time, price action is going to reprice into internal range that happened during the London Open. This is technically me trading the optimal trade entry in the New York session. Price traded above 62% Fibonacci retracement tool on this price range that happened during the London, and that was a sell again, and price attacked to draw liquidity. If you measure all of this price range that happened between Tuesday and Wednesday, this is price action delivering over 400 pips on GBPJPY. Okay, price delivered. What happened the next day? Look at what happened. Price traded back into, you see that bearish order block right here with a fair value gap. Remember, always remember, the most valid order block is the order block that has a fair value gap attached to it. Look at another one here, bearish order block. The last buy's candle that was traded through by consecutive sell candles, that is a bearish order block, but we're not going to be selling except we see price trade into the fair value right there, because that fair value is the internal range liquidity, also confluencing with the bearish order block, because the most valid order block is the order block that has a fair value gap attached to it. That was the sell entry. Okay, price created another bearish order block. Did you see that there's a fair value gap there? We traded back into that. This was during the Asian session. That was a sell again, and price massively fell off, clearing off again external range, liquidity below, and price action. Price action created a massive bullish repricing. Why is it so? Because we are anticipating to see the GBPJPY trade into internal range liquidity, especially on the daily or the weekly time frame. You see this internal range fair value gap with an old low in between. That is an IOFED, especially because we took out external range liquidity here and we're sitting on a bullish order block. So we do know that this guy is going to trade into internal range liquidity, the fair value gaps, the order block. So I'll be looking at this premium level here, the fair value with an old wick in between, that old low in between. That is an institutional order flow entry drill. I want to see this guy trading to this level next week. Then we again continue to sell, but for now I would rather want to buy into that level. So what did we do on Friday? Again, we bought this guy. Why did we buy? Because this guy had traded into a bearish breaker. Why is it a bearish? Sorry, into a bullish breaker. Why is it a bullish breaker? Price took a liquidity below, created shift of structure bullish. Don't mind me. Right here, shift of structure bullish, and right below it is a bullish order block. Why is it a bullish order block? The last sell candle with the largest body that was engulfed by buy candle. That is the bullish order block. Price traded into that level. Do you see that? Price traded into the bullish order block. Did it the first time during the Asian session. That's not the time we're looking. Did it the second time. Did it the third time. Do you see this? And created shift of structure again on 15 minutes time frame. On the 15 minutes time frame, price created a shift of structure, and we're waiting to see price action trade into internal range liquidity, the bullish order block, the fair value gap right here. I was actually looking at this fair value. So price traded into the fair value. Took a buy, but our stop loss, of course, was below that low. Lingered for a while, but price still delivered, and we targeted that relative equal high there because it's Friday, and Friday is usually a low price range, on Friday. So you reduce your expectations on a trading day like Friday. What am I expecting next week? I'm still expecting we're still gonna buy more, take out this consecutive highs, the low resistance liquidity run. Do you see these highs? 1, 2, 3, 4. I want to see price action take those highs, trade into that level that we want to see price get into, and we'll have more confidence to sell the GBPJPY. The more GBPJPY in the last few weeks has been my best pair so far, followed by gold. Gold has been doing an amazing price, delivering an amazing price action. You can see my markup on gold, very amazing. All the markup, gold delivers like nothing. Look at how gold has delivered massively into the objective right there. Okay, so gold is doing so well. Gold is bullish. Everything about gold is bullish. Price action traded into, you see that, internal range fair value in a discount between the low to the high, discount below 50%. That buy side imbalance, sell side inefficiency. Price traded into that level, and you look for signatures on the 1 hour to buy. Price action created displacement, traded back into the bullish order block. We saw entries happened on the 15 minutes time frame, and we were more interested to buy gold. Why? Because gold created shift of structure right here. Shift of structure bullish, and price traded back into that bullish mitigation. Why is it a mitigation? Failure swing before the shift of structure here. You have to really train your eyes to see tiny structures like this, otherwise you're going to miss on them and you will not be able to maximize these opportunities. All right, so price traded into the bullish mitigation block right there. So confluence time, you see the time there, 1 o'clock New York Standard Time. That's not the time to take entries. You're looking for, you see, 2 to 10 a.m. So price again, there was no entry right there until we see price action do this around 2 to 10 a.m. Then price created a displacement right there. Keep going, keep going, keep going. 2 a.m. New York Standard Time. This was it. Price action created that displacement again, shift of structure higher, traded back into internal range, fair value gap. You have to see it. Measure between 50% of this candle wick, 50% of that candle wick. That is called implied fair value gap. So price traded into that level. Also, you are looking at the old high right there, because we've violated that old high and it's technically resistance turned support. That is resistance turned support. If you go to 5 minutes time frame, you would see more specific. So look at the 5 minutes time frame. Do you see that this is structural shift? Price action created that internal range, fair value, bullish order block. You see the precision. Price traded into that level and expanded to the roof. We traded. So you just keep looking for entries as the week keeps unfolding. So this coming week, I'm still bullish on gold. And as for the dollar index, let's just take a look at the DXY, see if we have something. So the DXY has finally cleared all the lows that we've been expecting, and you know, this is just another confirmation. I think during the previous week we did an analysis and we were expecting the DXY to trade into this vacuum gap, that gap right there. Price actually traded into the gap on Monday, and this is confluencing also with, you see that support on resistance right there. Price traded into that level and we blew the sell side liquidity. So again, the seasonal tendency is working, everything bearish on DXY. The dollar is selling, we're going to be buying foreign currency. Okay, so the only issue now is because we took out this old low and we have a fair value gap below it. So if we see price trade into that fair value, because that is the drawn liquidity, remember I've been saying this, the old low with a fair value gap right below it, if price trades into that level, that is going to serve as the drawn liquidity. We may see a reaction. Price will want to, of course, inhale more before expanding again, because the way price action works is for every expansion you anticipate retracement into internal range. So if we see price open during the week, two things: straight into this internal range, we're going to look to sell into the drawn liquidity lower. If you see price open this coming week, trades into that fair value gap we outlined on the monthly, if price does that first, that will mean price action creating the low of the week between Monday and Tuesday. And for that reason, we'll rather look to buy into internal range on the daily time frame. So if it gets here first, we buy to the internal range. If it gets into the internal range, we sell to the next external range. I'm sure you guys understand what I'm saying. So that will be all, and this would be our anticipation during the week for the dollar, for the GBPJPY, for gold, and for for every other foreign currency that we're trading. Okay, I believe that you guys, if you have questions, please engage me in the comment section. Type your questions in the comment section. Let me know what your questions are. Let me see if I can assist in one way or the other. If you have questions, just write me your questions in the comment section. If you have questions, engage me. Let me see your questions, my friend. Okay, so I don't think I'm seeing your questions, but if you do have questions, please do ask. If you do have questions, just ask. Let me see how best I can assist you today. All right, so those of you who've been reaching out to me also for one-on-one mentorship, today is weekend, and usually weekends are for, I usually do discounts some weekends, not every weekend. So if you want to join me on one-on-one mentorship, also find the link on the description of the video, reach out to me, and I'm going to give you access to a private trading group where you have access to my private trading models. I'm sure it's gonna impact your trading positively. You're gonna do better, and you're gonna have access to accountability coaching, and you have access to my private DM, and we trade together and explore better trading opportunities. So reach out and take advantage of this. How many years did it take you to be profitable? This is not the question you guys should be asking. All right, because how long it took me is not a template for how long it will take you, as long as you are doing the right thing. Okay, as long as you're doing the right thing. The most important thing is find a proven mentor who has a proven concept, who has proven results, that is working, and make sure you learn exactly what the mentor is teaching and practice it over a given period of time. You see, the problem most times is a lot of you will rather be you guys will learn, but you don't practice the things that you're learning. Learning is only effective when it is practiced. That's why you must be a doer of the things that you are, you're teaching. Don't just be hearers, be the doers, be the students who practice the things that you learn about. Be the student who does the homework. You do the inside study. You show up on the chat every other day. Today you are here, tomorrow you are not there. That's not the kind of student who succeeds in trading. Show up every other day regardless. Okay, so once you stay that consistent in learning, give yourself 6 months to 1 year learning and practicing, and you're going to see a turnaround in your trading career. Okay, all right, so in the absence of anything, I believe we've done so well today. We're still going to see you during the week, and until next time, I wish you good luck, good trading.